Well, if you see since listing, this is the second time IndiGo is doing their physical analyst meet, and this analyst meet will be held from 10 a.m. today to 4 p.m. In their iFly Academy and their corporate office in Gurugram. So what is something that the street should expect to come out from this second physical analyst meet? Firstly, the company might give some guidance and some indication towards the Q4 performance so far, and also how's the Q1 outlook looking like for the summer holiday period. Apart from this, they might give some commentary on the competitive intensity in the sector, given that a lot of players have now come in again in the aviation industry, and a lot of order book has been placed by many companies. Apart from that, what is the target for fleet size when it comes to the financial year FY25, their capacity growth target, and how many new destinations they plan to add in the next financial year is something that the street would be wanting to know from this analyst meet. Apart from that, going forward, how is their growth plan when it comes to domestic versus international, where the focus would be, where they are planning to grow more is something also the street might be wanting to know. Apart from that, the new DGCA norms which are getting implemented related to pilot fatigue from the June 1st, what will be the impact of the same on the company, because analysts are expecting the number of pilots required by the company would be higher by around 10 to 15 odd %, which would have an impact on the cost. Now, if you see the last year targets that the company has given, they have already over delivered on those guidance. Now for FY24, that fleet size guidance was around 350, and currently if you see the fleet size, it's around 358. They had guided for a capacity growth of north of mid-teens, and for the 9 months, if you see, the capacity growth has been around 24%, and for the full year, capacity growth is expected to be around 21%. They had aim to add around 10 to 15 new destinations, and so far they have already added around 14 new destinations in FY24, and they had also plans to increase their market share when it comes to the international market, and so far they have already increased their market share from 15.9% to 18.5%. Now this growth in international market share is good, given the fact that they are competing against the biggest like Emirates, Etihad and Singapore Airlines. So in past, at least the company has under-promised and over-delivered, so it will be important to see what they promise to deliver for the next financial year, that is FY25.